A $500 million regulated fund just quietly launched with one job: buy and hold Kaspa. That's not speculation. That's institutional-grade capital formation arriving in a blockchain that most retail traders still sleep on. And the math? It's absolutely wild. Hey everyone, I'm Goldrush, and welcome back to the channel. If you're new here, we break down the crypto news that actually matters, the stories that move markets and separate the signal from the noise. Today, we're talking about Kaspa, and trust me, this is not your typical altcoin update. We're covering institutional adoption, developer ecosystem explosions, and liquidation setups that could reshape the entire chain's trajectory. Stick around, because by the end of this video, you're going to understand why everyone from retail traders to institutional players is watching this unfold right now. Let's start with the story that absolutely blew up my feed yesterday. This post from Uncle Stefan breaks down something so significant that I genuinely had to read it twice to believe it. A regulated fund in Abu Dhabi is being set up to allocate $500 million, yes, you read that right, exclusively into Kaspa as a treasury asset, not diversified across 30 tokens, not a hedge strategy, just Kaspa, full stop. Here's what makes this different from typical crypto announcements. It's operating under ADGM, the Abu Dhabi Global Market, which is one of the strictest and most respected regulatory bodies in the world. This isn't crypto anon money. This isn't venture capital that's going to dump on us. This is institutional-grade capital formation backed by serious regulatory infrastructure. The fund is called Lehman Bush Capital, and they're running two distinct mandates: traditional energy and renewables on one side, and a qualified investment fund that holds only Kaspa on the other. Think about that for a second. An entire fund dedicated to accumulating a single cryptocurrency at scale. Now here's where it gets really interesting. Kaspa has a thin order book. We're talking about maybe 10% of the total supply being truly liquid on the market right now. $500 million flowing into that environment isn't just buying pressure. That's price redefinition territory. This is how we see moves from 0.05 to 0.50 or 0.10 to $1 in a single cycle. Institutions don't come in chasing 2x or 5x returns. They come in because they see something retail completely misses, and what they're seeing is Kaspa positioned as the real-time data and truth layer of the entire digital economy. We're talking Project Orion territory here, a $1 to $3 trillion utility thesis. When a regulated fund publicly commits $500 million into a single cryptocurrency, that's not speculation, that's not hype. That's confirmation that Kaspa is graduating from being a community project to becoming global infrastructure, and the price will catch up faster than people expect. The window is closing, and retail honestly doesn't see it yet. Institutions already do. Now, institutional money is only half the story. The real magic happens when capital meets actual utility and development. And this is where Kaspa Teacher's post really got me thinking about the bigger picture. According to Kaspa Teacher, if everything stays on track, we're about to see 3 major breakthroughs all arrive in the same year, 2026. We're talking about IGRA, DAG Night, and VPROGs launching simultaneously. That's not just a step forward, that's a seismic shift for the entire ecosystem. But before mainnet, let's look at what's happening right now. IGRA Labs just entered a new phase, and this is massive for developers. Public testnet nodes and RPC endpoints are now live, which means anyone can run a node, deploy contracts, and build directly on top of Kaspa's blockDAG technology. The Caravelle testnet is proving out EVM compatibility, contract deployment, and early roll-up behavior. This gives us a real glimpse of what programmable applications secured by Kaspa's proof-of-work power is actually going to look like. And we're talking about over 1 exahash per second of hash power backing these applications. That's serious security. What IGRA is doing is solving a fundamental problem. How do you add programmable capabilities to a proof-of-work chain without sacrificing the security and decentralization that makes proof-of-work valuable? The answer is MEV-resistant transactions with up to 5,000 transactions per second. Mainnet Galleon is coming next, which marks the official entry into Kaspa's smart contract era. Think about what this timeline means. We're not talking about vaporware or pipe dreams. We're talking about testnet infrastructure already live, with mainnet closing in. The IGRA token distribution is set for February 2026. This is real development happening on real timelines. Now let's look at something that reveals the trading dynamics happening right this second. This post from Kaspa Daily shows that over $15 million in open Kaspa short positions are clustered right at the 0.056 level. As you can see in this chart, there's a concentration of short side leverage at that specific price point. Some of these positions are leveraged up to 100x. If price were to move into that area, a notable portion of these positions would be at risk of liquidation. We're not calling direction here, but we are highlighting that there's a leverage imbalance worth watching. The chart shows peaks in high leverage exposure, exactly where Kaspa is hovering. This is actually a really interesting dynamic because it creates a potential catalyst. If we see even modest upward pressure from current levels around 0.055, you could trigger cascading liquidations that accelerate momentum in either direction. These kinds of setups don't guarantee anything, but they do show you where the vulnerability is in the market structure. And knowing where the leverage is clustered? That's half the battle in understanding short-term price action. The second post from Kaspa Daily gives us another important clue about what's happening on-chain. Kaspa exchange holdings are at the highest levels in months. Now, before you freak out, understand what this actually means. Yes, some holders are moving coins onto exchanges, which could prepare for liquidity. But historically, elevated exchange balances tend to coincide with increased volatility and potential downside pressure. It's definitely a dynamic worth watching. However, and this is important, this doesn't automatically mean selling is incoming. In fact, the community has been pretty bullish about this, viewing it as a weak hands filter that actually strengthens long-term conviction. Recent ecosystem updates showing improved scalability to 10 blocks per second have everyone focused on the bigger picture rather than short-term volatility swings. The pattern we're seeing is correlated with short-term price peaks, but outflows from exchanges typically signal accumulation by serious holders. If we see coins moving off exchange balances, that's actually a bullish signal that conviction is building. Look, here's what I'm seeing. Retail traders are still focused on price action and listings, but the real story is institutional adoption combined with developer breakthroughs all arriving in the same window. $500 million. 3 major launches in 2026. Proof-of-work security with MEV-resistant transactions and 5,000 TPS. This isn't just another blockchain. This is a new category entirely. Kaspa is not trying to be the next Bitcoin. Kaspa is the correction to what Bitcoin became. It's the settlement layer that the internet actually needs. And honestly, we're extremely early. But institutions are no longer ignoring this. The signal is loud and clear, and the early days are ending. If this analysis resonated with you, I need you to do 2 things right now. First, hit that like button and subscribe to the channel. Turn on notifications so you don't miss future updates on Kaspa and other opportunities that are flying under the radar. Second, share this video with someone in your crypto community who needs to see this. The window is closing, and the people who understand this first will be positioned ahead of the crowd. Want to see more breakdowns like this? Check out my other recent videos on emerging Layer 1 blockchains and institutional adoption trends. The links are in the description. Remember, this is not financial advice. Do your own research, manage your risk, and only invest what you can afford to lose. The crypto market moves fast, and leverage is dangerous. We saw that with the short positions Kaspa Daily highlighted. Thanks for watching Goldrush Crypto Daily. I'll catch you on the next one. Stay bullish, stay informed, and I'll see you in the next video.